How are you doing? How was the weekend?
The weekend was amazing. It was a great trip with my friends.
Awesome. What'd you guys do?
We went down to San Diego, and then we did like a bonfire. We went on a boat. We walked around Seaport Village, which is like right by the water.
Okay.
So there's like a lot of shops and stuff there. We went to Little Italy. We walked around that area, went to some nice restaurants, just chill stuff.
There you go.
Yep.
Sounds like
It
a
was
good
pretty cool
time.
though. Yeah, it was pretty cool. How was your weekend?
It's great. Productive.
I love that. I saw your
Productive.
story on Sundays. I was like, there you go.
Wait, what was that? Oh, you
I
saw
said
my
I saw
story?
your story on Sundays. Yeah.
Well, I was putting up a shelf or something, right?
Yeah.
Yeah, it's fun hanging, putting stuff together, hanging stuff. I'm
Mhm.
becoming a dad more and more every single day. It's great. It's remarkable.
It happens when you go from watching cartoons and all that stuff, and you start hitting that point where you're like, all right, HGTV, that's where I want to be.
Yeah, yeah, it's nuts. Watching Home Improvement.
Yeah.
It's nuts. I
It
mean, I
does.
I see the trend happen with women a lot too, and especially
Yeah.
like Meg, like watching her with our puppy that we're getting or we
Hmm.
have. It's crazy to watch her like develop into a mother basically. You know, it's
Yeah.
still a dog, but at the same time, like it's your child.
Yeah. Absolutely.
So the more you get older, you just start to develop these traits. Like men get old
Absolutely.
man strength and start going to Home Depot every day. All right, who
I
do we
used to
got in
go
here?
there a lot with my dad as a kid.
Home Depot.
Yeah, my dad, he'd be like, "You want to go out somewhere?" I was like, "Yeah, sure." We'd end up at Home Depot.
I used to be honest with you, I used to hate it as a kid. I couldn't
Yeah.
stand going because my dad was always there. And now I don't mind going. Like I like it.
Yeah. Now you're like, okay, I get why he's there now.
It's yeah, it's our new toy store.
Yep,
You think
absolutely.
about it. All right, I'm
How's it
trying to
going,
get there
everyone?
we go. Yeah, what's going on, guys?
What's up? What's up? Good morning.
Carlos, what's up, my man? Hope everyone's doing well. We got Duke Devil. Wow, Devil. Jagaloo. What's up, boys?
So I'm gonna do the same thing where I'm gonna go make breakfast real quick,
Okay.
but I'll start the live stream on YouTube, so you should be
Okay.
good to go, and I'll be back in it shouldn't take me more than 30 minutes.
All right, cool. I'll let everyone kind of pile in. I'm gonna eat my oatmeal while we're doing that,
Okay.
and then we'll chat a little bit, and then I'll start breaking everything down. Let me get the
All right.
economic
Awesome.
calendar out.
All right. So I'm
Take a
gonna
look
go
at
ahead and
this. I'll actually send this into the chat. This is
Mhm.
pretty interesting. Um, Monthly Forex seasonality. So how do these pairs play out during certain months, and how
Mhm.
big November is as a month in the Forex industry? So what do I do? Here we go. Let's copy this into the chat right now for you guys.
All right. Awesome. So we are also live on YouTube, so you're good to go. I will be back in 30 minutes.
Okay. Sounds good. All right. Hope everyone's doing well. Is everyone having a good week? Like I said, we're just gonna shoot the shit for a second. I'm gonna eat some oatmeal. We'll break down the fundamental economic chart, and then we'll get into the actual charts. You know what? I'm also gonna pull up the YouTube stream on my iPad right now. Also, I don't like doing this because I like to break down the charts beforehand, but I'm actually in the GJ buy right now. Just because it's the ideal setup. I'll just go down to the lower time frame so you guys can see what I'm talking about. Perfect setup over here. You'll see exactly what I'm talking about. I don't want to, start breaking the chart down yet, but this is the perfect setup. We finally broke a previous resistance right around here yesterday, right? I grabbed part of this move up. I already got out of it, and now we already retraced, creating a higher low over here, and we have a nice rejection over here in the 1 hour, specifically right over here. This candle, we created that support. This candle created its bottom wick past the high of that candle with some volume. We should be retesting this high and continuing right back up with a clean move to the left. But let me, like I said, I'll get myself situated here, and then we'll start breaking everything down for you. Anybody have any questions about that specifically?
No, but I seen that. I think out of personal comfort, I feel like I missed my entry.
Okay, I like that. That's an awesome like development, Carlos, where you're patient and you're not getting FOMO on. It's like, all right, I missed my entry, I could get the next setup. Right? You're not letting emotions creep in, kind of like what I was talking about this morning in the group.
Third.
Let's pull up the live stream on YouTube just so I have the chat over here. She doesn't have our videos on here. Oh well. So yeah, hope everyone's doing well in the YouTube chat. Maybe 2 seconds. We just have a bite or two, and we will get it going. All right. Get that morning Joe in. All right, let's take a look at the economic calendar. So this may sound repetitive to some of the guys in my group right now, but if you take a look at the economic calendar over here, the main thing that banks and institutions and big investors have been looking at right now are the retail sales coming out for this past week, right? And what we had over here, we had good retail sales. Now, what I think this is off the heels of the holiday season coming up, right? Like if it was a normal time, maybe August or let's say April, any of those times, I don't think we would have as good of, retail sales right now when it comes to supply chain issues, inflation, everything going on right now. I think this is mainly off the heels of the holiday season coming up. But we had some good numbers coming out for retail sales nonetheless. So that was very good for equities, very good for the market. And it's a good sign moving forward right now for the holidays. Moving into today. Today. So what we had over here, actually, before I get into that, I just want to break down what we had for the pound as well. Okay, so a lot of you guys trade GJ, right? Or GU, any of these Great Britain pound pairs. Say that 5 times fast. A lot of you guys trade that, and this was the main focus over here coming out of this week, right? A lot of people looking at unemployment. Bank of England looking at unemployment. If you guys remember last month, or actually this month, they said that they were going to be increasing interest rates. They did not. They threw us a little curveball, and that's why we corrected the entire move coming back down, that we were in that 2-week, bullish run that just came right up to 158.200. And now we just corrected almost the whole thing just because that was all sentiment. And I'll get to that in a second. But the one data point that the Bank of England has been looking at has been, or that wants to look at, is average earnings index, claimant count change, and unemployment rate coming out, right? Now, average earnings index went up, right? So that's good. Claimant count change actually went up as well, which is not good, right? Claimant count change is how many people are applying for unemployment, and that went up in Great Britain. Now, unemployment rate fell 0.1%, which is good, 0.1% from what they were expecting and 0.2% from the previous. So that's good. So that is a sign for the pound over here for them to say, okay, maybe we could start, tapering away, or they want to increase interest rates first. So, which is pretty interesting. But that means that they could start moving in that direction with some solid numbers. Now, looking at core retail sales over here. Retail sales, again, we had some good numbers coming out. Again, I think it's the holiday season. But this week, we have a lot of FOMC members speaking. The Fed right now is going to be making a lot of calls, a lot of interesting calls for the coming months. When are they going to start tapering? I don't think they're going to increase interest rates till the second half of next year. But really, they might not have a choice but to do it sooner than that because of inflation and what's going on right now in the U.S. Now, we had more data points for Great Britain coming out this week, which was CPI, and that all came out much higher than expected, but maybe they weren't too, they were all higher than what they were expecting us to get, right? But the thing is, this isn't exactly good, right? Normally, obviously, CPI, when it's better than expected, that's a good thing. But right now, in our inflationary environment right now, or climate, it's not too good with all these prices raging. That affects the middle class, the lower class. It affects everybody. When you get inflation, when you got goods coming in, like for instance, I was actually going to put this on my story yesterday, but I just got sidetracked. I was at the grocery store, and there's a bag of lettuce, a bag of not lettuce, but like a salad mix, right? I get that almost every week. I actually do get that every week, and I spend like $3.49 on it, right, on average. It's right now up to $4.99. That's a little bit more than a 25% increase. So that's just real life inflation. What you're seeing, you guys are seeing it affect you guys all in the getting gas for your cars as well. But it's affecting every single industry, especially the supply chain issue. When you don't have enough truckers transporting things to stores, and from ports to stores to different places around the country, you're going to see a lot of prices starting to rise, and you're already seeing that. But over here, again, CPI was coming out today. A lot of FOMC members speaking today. If you guys trade CAD, some important data coming out, CPI coming out for you guys. I don't pay attention to CAD, so that's all you guys if you do trade it. Moving into tomorrow, we have unemployment coming out, so this should be interesting. Philly Fed Manufacturing Index coming out. Again, more FOMC members speaking. And then moving into Friday, again, you have some very important data points coming out for retail, for the Great Britain pound. You have retail sales coming out. You have Lagarde speaking again. CAD, you got more stuff coming out, retail sales coming out, and not to mention more FOMC members speaking. But on the equity side of this week, retail sales was coming out, and what you have as well is major corporations like Walmart and Home Depot announcing their earnings. So it's a big week for what's going on around the world as far as our economy and how we're running with these major manufacturers or stores, retail stores, any of that. So getting over here into the charts over here, we're just going to mark up, again, like I said, you guys are normally on these lives with us, so the way I look at the market over here. You got that downtrend, multi-year downtrend coming all the way down, which we just broke. Let me actually get some of my tools out over here. Perfect. Oh, didn't mean to do that. So you had this multi-year downtrend, which we recently, a few weeks ago, just broke through, right? We broke through, came up, retested 156, tapped into 156, passed it, hit 158, and now after the month was over, we ended up closing at 158, and now we're rejecting over here. But if you take a look over here, we're just going to mark off, not that this is too important to us right now, but this was the crash from the 2008 market crash right over here, right? And then this was Brexit, never broke the low, right? Again, I'm doing this kind of quickly only because a lot of you guys have seen me break down GJ and know all the economic background of what's going on. Now, the reason I'm also doing it kind of quickly is because we do have a trade opportunity in for GJ right now that I'm currently in that I really want to break down for you guys. But looking over here, again, that crash from Brexit never broke the low of the 2008 market crash, even after that correction over here. And then over here is COVID. Right, March 2020, April 2020 brought us all the way past the lows from Brexit, and then snapped back, never closed below, and then we've been in a recovery ever since. A recovery for the currency, at least. So that's our nice little trend over there. We're going to mark off a couple levels. 156. Perfect. Then we'll mark off some as we go. We'll mark off 149 over here as well. Almost got the even. Perfect. So we're kind of sitting in this higher time frame range over here, right? We failed to close above on the month, above 156 over here, and then we created that top wick, and we just rejected coming all the way back down into this level. Previous highs over here, if you look at the lower time frames, we'll break that down in a second. But we're also breaking. We already broke above that multi-year trend, and now we're kind of retesting this area, right? This is a very key area right here that we need to be retesting to then continue right back up. So getting some good data numbers coming out this week, this might send the pound up, knowing that they may be increasing interest rates and they don't need to be stimulating the economy anymore. Looking into the weekly over here, again, this is beautiful. Mark off 158, critical level. So again, breaking down the fundamentals and how they line up with technicals, this was the market sentiment of pushing GJ all the way up to 158 due to the fact that people thought that they'd be increasing interest rates, this month, right? And they didn't. So we ended up correcting. Once we reached 158 over here, we ended up kind of consolidating here on the higher time frames. And then when they announced that they weren't going to be increasing interest rates over here, we were already below this wick, and we ended up just tanking and correcting this entire candle right here, right? So now the previous weekly candle, we were just ranging in this range right over here for quite some time, and we finally broke out this week. But we have a very strong bearish candle right here. Came all the way back down to previous candle body highs. We ended up ranging around this area, printing a doji candle, right? The next candle never passed the low of the previous, and it's just straight bullish, right? Bouncing off this multi-year downtrend as well, right? So we're holding a good support right now. We still need some things to happen for us to completely correct this move and continue right back up to 158. But, nevertheless, we're holding a solid support with this current monthly candle or current weekly candle. We're halfway through the week, and it's already very strong like this. So maybe we'll be getting some kind of a retracement, or we're going to continue right back up and kind of correct this candle right over here to continue up, maybe. But like I said, we need some strong data to be coming out of the pound. Looking over here at the daily. So we broke this range. I was telling my guys in the group, you could ask any of them, do not trade in this. I know some people were trading in this as far as scalping. It's just not worth it, right? There's some ranges that you can trade, like this one right over here. This one had some good moves in it. But when you get sideways action like this and everything's 50-50, it's very sticky to be trading in that. It's almost not worth it, because a lot of you guys, especially just starting out, will try trading in this. And then once price breaks out and you get a clean move to the left right over here in the higher time frames, there's one even shorter somewhere around here, which we'll break down in a second. But you got clean moves on either side of the range that you could be capitalizing on. And if you burn your profits through here, you'll end up break even at the end of the week. Or let's say at the end of the month, because now you're trying to grab this. And let's say you do grab this move, right? You do grab this move, but you burnt a lot of profits and lost a lot in here. So, it's just not worth it, especially if you're just starting out. If you get more experienced, right, and you start to understand your pair more, you start to study a little bit more, back test more, and really, like I said, understand it, then sometimes you could play in some of these ranges. But to me personally, this isn't one of them. This isn't that kind of a range. Looking at the 4 hour, 4 hours clean. We ended up breaking. Actually, you know what? Let's take a look at this trend that we're at right now. Now, I mainly pay close attention to support, resistance, supply and demand. That's my main confluence. You guys know that. But again, when some trend lines make sense, they make sense. But we do have a hard rejection over here on the 4 hour, which kind of concerns me, tapping off the 200 EMA over here. KB coming in. But nevertheless, we do have clean price action after breaking the resistance right over here. Again, see how this range right here is just not worth the trading in, right? You got big wicks, small bodies, price just printing sideways, no clear direction. Even with price holding support over here and pushing up, it's still very choppy. You got this wick coming down to grab liquidity and ended up printing bullish and continuing up, but just very choppy over here. It's not that price action that a lot of you guys I know look for. Now we ended up breaking above, retesting over here and continuing up. Nice little retest candle over here. This candle closed a strong bullish candle. Now the wicks are starting to get a little bit crazy on the 4-hour, right? A lot of candles passing the low and the high of the previous candles. It's just getting a little choppy over here, but we are holding support, right? We have this support right here that you could print. And then possibly if we go down to the 1-hour, you can adjust that right over there. So price is pushing up and respecting a bullish trend, higher highs, higher lows. You do have the clean move to the left, which should give you some confluence. But what's interesting to me is that this wick came right up into this level. Previous support over here, previous rejection points over here, resistance, support. And then I don't know if you guys remember when price action was over here back in June. I remember all this. Previous resistance, previous support over here, 154, 730 over here, previous support over here as well. So it's a critical area, and that's what we're reacting to right now. Now, I like this 1-hour candle, and this is what I was pointing out before. The 1-hour over here ended up rejecting, holding support, and closing bullish. This candle came down past the high of that candle, closed bullish. This candle right now is, what time is it? 7:08. It's just opening up. So it's just the start of the 1-hour. So it looks like we're already creating our bottom wick. We don't have a top wick yet, and we're in a bullish trend. So this gives me confidence that price is going to at least continue up to these candle body highs, right? I entered right around 154, 340. I don't know why I said 7. As this candle flipped, right? Flipped bullish, started pushing up. My spread, brought me up here. So I ended up entering over here, and now price is starting to reject, but we never passed the low of that candle over here. And honestly, I would have been securing or, closing some of it if I wasn't, with you guys right now. But, I was kind of distracted by breaking the charts down, but I do still like this setup, and I think we should be continuing up and retesting this area of 154,500 at least before maybe we get some kind of reaction coming right back down to this area to maybe continue up. But like I said, 157, let's call it 154,750, we'll call it, is a very critical level over here. We did create that high, and we could retest it, but at the same time, we're meeting up with this downtrend over here, as well as that previous support resistance key area to the left, right? Does anybody have any questions about GJ? Let's see, we got some people in here. Viniac, absolutely, man. Just checking out the YouTube chat over here. All right, so that's GJ. Take a look over here. Okay, so something interesting as well is that we are bouncing off this level over here. If you take a look to the left, previous resistance, if you look at the 15-minute and the 30-minute over here, price is trying to stay above that level, right? We did break the low of the previous 15-minute and kind of rejected over here. But again, the 1-hour never passed the low of the previous, and it doesn't have a top wick yet. So we'll see how the 15-minute candle closes if we start flipping or anything like that. But right now, I think we're in okay shape. Let's go over to gold right now and take a look at what's going on. I will mark off some trends over here we could possibly be following, but mainly our support and resistance levels. 1680, as you know, very favorable level. Very high impact level as well. We had that double bottom over here. Yeah, double bottom over here before we came right back up to create a new high. And then we ended up consolidating over here based on two very solid NFPs that came out 2 months in a row, right? So actually 1 month and then the month after that. So right now we are holding support around 1756, right? Previous support as well. I'd rather just draw it on the lower time frames because I hate just adjusting on that from the monthly. But right now, as you can see, 1830 was a very significant level over here where price held resistance, and we came right back down to 1680, where we then closed as a doji candle. We rejected that completely. This candle ended up closing bearish, but never past the lows over here. We ended up forming a support and then continuing right back through 1830 based on the fear in the market right now of inflation and the direction of the economy. Looking at the weekly, right now, we can mark this level off. Again, we're holding that support right there, previous resistance here, and a nice solid support that we just held, and we just printed higher highs, higher lows, besides this candle right here, grabbing liquidity. But we just passed right through 1830, which is a level that I've been looking at for a while now. And I was saying if price breaks 1830, we're going to have a nice little move up with that clean move to the left, right? So we'll mark off our next target based on the weekly. Obviously, we'll have more as we break down the lower time frames, but we have a nice resistance up here around 1910, 1900 right here. So this is something that you want to pay attention to as far as our next target coming up. But before that, we have a very critical level around 1875 that we need to pay attention to. I'm actually going to close 50 on GJ just because the 15-minute is about to close bearish and it passed the low of the previous candle. So for me, I'm just staying cautious. We are near my entry. So if I just close 50 right now, I'm good. But these are my rules. These are my scalping rules. If price closes bearish or in the opposite direction of my previous, or I'm getting my words mixed up. If price closes in the opposite direction on the 15-minute, if I take the trade on the 30-minute or the 1 hour, then I'm going to close 50%. All right, there will be opportunities for me to re-enter. All right, price is starting to flip right now, which is good. But closing 50%, if you're unsure about a trade, I was actually going over this with the group yesterday. If you're unsure about a trade, just close 50 or get out of it, right? Especially if you know you shouldn't be in a trade. I know a lot of you guys are just starting out as traders. One thing you want to understand is just cut those losses short. I know you're losing most of the time. Maybe you're at break even, but make sure that you're getting a habit set in your trading plan and in your mind that you're going to close 50 or you're going to close the full thing at certain points. You want to have that entry plan where you know your setups, and if your setup presents itself, okay, I'm going to do this, and then if price does this, I'll do this, right? And then you have that exit plan of if price does this, I'm closing 50. If price does this, I'm closing the full thing, right? It's critical because if you don't have that, you have no confidence. You don't have a trading plan. You don't have a business plan. It's like having a business without a plan, right? You have no idea what you're doing. So just keep an eye on that. We'll actually look at the 15-minute right over here. 15-minute actually did close bullish over here, rejected this area, right? Previous 15-minute resistance, failed to close below this area over here. So could we be heading up? Possibly. But like I said, the one thing that does worry me a little bit is the fact that we have that downtrend over here and we just rejected based on the 4 hour. Look at that 4 hour rejection. We still closed bullish. But the thing is now, these candles were hovering and these are very weak bullish candles. But again, we do have the clean move to the left and we could be filling this wick. So we'll see what we get. Trade based on what you see, not what you think. This looks a little bit clearer on the 30-minute. So we'll see how this plays out. 716 volume. Also keep in mind from like 7:30 to 8 o'clock, get some really good volume on GJ most of the time. Hasn't been happening as of late, but you get some good pushes around that time pretty normally. Now back to gold over here again, kind of breaking this downtrend over here. This used to be my downtrend that I was, basically following. We were breaking in, and we ended up doing that double bottom over here on 1680, and then we broke right through that. But right now, we've been printing lower lows and lower highs in this range, right? Staying in this range, and now we're starting to break out and maybe come up to retest 1910. Depends on how much fear is going to be in the market coming soon. So I'm just checking on that trade. So looking over here at the daily, now you'll get a better sense of what's going on. Right now, you have price create that high after breaking 1830 over here. We created a high right up here at this previous support. So if you mark this level off right here, around 1866, you have a previous rejection points in that area as well. We can adjust that right there. Doesn't have to be perfect, but previous support, rejection points all over here. It's just something that you need to pay attention to and why price is reacting to this level. Nice clean move to the left that we just mirrored. I wish GJ would do the same thing, but that's price. But price is creating this high, reacting to this level, and now it looks like it's trying to hold this support right here, which we'll drag to the left and see if it lines up with anything. There you go, previous support, right? That's simple, just reading a chart. So now we're sitting in this area over here, looking at the 4 hour. Now, since holding this support and rocketing up over here, we've just been in a nice bullish trend, right? You could always do this, but you don't want to go too crazy with trend lines so they can confuse you. So 1865 over here was a nice solid resistance. We ended up breaking out and breaking right back into the range. So we'll see. We're holding the support here. Nice, healthy 4 hour bullish candle. Next 4 hour candle came down, created a bottom wick, and passed the high of the previous. So could we be coming up to retest this previous high up here? Is there anybody in here that trades gold? I know Chris does. Anybody else? Anybody else looking at anything else right now on the 4 hour? You got a check on. Yes, sir. My man. Got that 715 mile. Love it.
You could check GU if you want.
You're looking at GU?
Yes, sir.
All right, awesome. Send a chart over. We'll open it up and then I'll break it down. But yeah, this is a great article over here. If you want to know what seasonality is when it comes to trading Forex, this is any business as well. You got to understand what times your business is succeeding throughout the year, when you normally have successful months, and replicate that for the next year and what you were doing during those months. Same exact thing for trading, right? How often does price play out during November? How often do your setups present themselves in November? How hard does the market move in November, right? So some of these different questions you can ask yourself. And this is a good article to tell you what pairs move good during different months, what pairs move bad during, let's say November. Looks like Stipe set the chart. I haven't traded that range in gold for a few days. Awesome. This one?
Yeah, that's right.
Yeah, I don't blame you, Ian. I mean, it's like when we were over here, when we were below 1830, I didn't trade gold for weeks over here. It's just nasty price action, right? It's not worth kind of risking everything on these setups over here. So this is just something I wanted to stay out of. Could have grabbed part of this move. I was fine though because I was in GJ. And then you get this consolidation over here that we're now consolidating, trying to push out of. Let me just.
Yeah, gold is my second pair, and GJ is something I've been trading longer, so I feel more confident when I enter gold. It's still at a lower lot size, so I mean, GJ just usually looks more attractive because I can see it better.
There you go. Yeah, I mean, I think that's what we talked about last time, is having that secondary pair in your back pocket, like something that maybe you don't back test as much, but it's something that when you're live trading your main pair, it's just something that you're looking at on the side, and it's like, okay, I see how this plays out during the New York session, right? This is working. This isn't working. I'm going to start journaling some of these trades that I should be taking. Okay, now a couple, a month goes by or a couple weeks go by, and it's like, all right, now I feel confident in the way this pair moves. Maybe I could risk a low amount, or lower my risk on some of these setups and see how they play out. And that's how you develop your familiarity with some of these pairs. All right, and as time goes on, maybe you get experience enough where you can have 5, 6, 7 pairs in there that you really know very well and you're very confident. But right now, make sure, like I said, a lot of you guys are just starting out. Make sure that you're focusing on 1 to 2 pairs, and that's it. You can make a very good living off of 1 pair. You can make a great living off of 1 pair. Now, if you get a week like we did last week and the week before with GJ, maybe it's not too ideal because you're not going to be making too much money that week, right? That's why you got to have that secondary pair. But again, it's realistic to make a living on 1 pair. All right, so we'll go back up to Stipe over here. Stipe sent a chart in for gold. Awesome. Broke right above this consolidation over here. Let's see. Stipe, next time you send a chart in, if you could just number these, right? Like what you're thinking on each one. It's just like 1, 2, 3. It's like I could just get through it. But nonetheless, good breakdown. What was that, brother?
I usually do it. I forgot.
No, it's all good. I figured you normally do it. I was wondering why it was maybe it's just a quick breakdown, but initial stop placed below current 4-hour candle. Okay, current candle for new 4-hour candle upon entry. Okay, cool. So wow. Yeah, you're trading in this consolidation over here. Now, if that's your style, 100%. I know you're you do your thing, but TP minus 40% closed.
Yeah, because the whole trade was based on 4-hour candle.
Okay.
So I closed another 50 at 50 pips. That's somewhere around 1864. So I'm pretty much now left with less than 20% of initial position.
Okay. And you're just letting this thing run.
Yeah.
Beautiful.
I think that I can leave the remaining. I'm at my stop loss is break even, so I'm kind of done for the day with that.
Good stuff, man. Good stuff. Just let it run. And that's where you're going to gain that confidence, where it's just like the more you let it run, and I know it's hard, especially in the beginning. I know it's hard to hold runners, right? You just want to grab every single dollar that you can, but sometimes it's good to just let it run. Most of the time it's good when you have a trending market. I go over this all the time, but like when you're trading in the consolidation, like I said before, there are opportunities for you to trade in the consolidation and play that range. But most of the time you want to be closing the full trade instead of trying to secure leaving a runner and hoping it just plays out. Unless you get like a major downtrend, and then all of a sudden on the higher time frames, you start to see price turning around, right? And then you get that trade like in the middle of the range where you find that support, and then you see price breaking out of the resistance, mirroring the move to the left, kind of like GJ right now, and continuing up, maybe then. But most of the time when you're trading in those ranges, you got to know when to close the full thing and when to leave a runner. And that's something that just takes experience with you moving forward with your trading career. Good shit, brother. Good stuff.
Thanks.
Take that off. All right. It's kind of a cool chart. I like this. Black background. I wish I could go to a black background, honestly, because I just like it. But and also it's easier on the eyes. But I have all my charts on a white chart. Yeah, I'm just kind of set in my ways now. So this is GU. Okay, we held support. We were in that downtrend. Same thing that GJ was in, right? We ended up consolidating, and now we're still kind of in this consolidation over here. But let's see. Yeah, we got this range right here.
I'm
This
sorry,
range.
I'm not a great journalist like you.
What was that?
I'm not a great journalist like you. I'm sorry, I didn't mark up the chart like how you usually do.
No. You're good, man. You're good. I just, I mean, now that we have your voice, like if you could just explain what you're thinking on this, but normally it's good to have the bubbles of what you're thinking and, going through, basically how you took this trade and what you're actually doing. So if you just want to break this down for us, that'd be awesome.
Basically, after the consolidation, I just, would put in my trade, as you see, it is already running.
Mm.
And once it goes up, probably once you look left, obviously you didn't be able to see on the left on this. But if you look left, there was also a consolidation. I also have my first TP at room 134.822. And then once it passed that, I closed my initial order, and then I have a runner, just let it run for the rest of the duration of the period.
You said 832 is your first TP?
34822. Yeah.
So it's probably right around here, right?
Yes.
Okay. Now what makes that your first TP?
Because when I look to the left, there's a major consolidation to the left.
Okay.
Obviously, you won't see it on this chart. I'm sorry.
Okay. Now also I want to know what the range is from this previous resistance right here up to this resistance right there. Like what's that range right there?
It's like about a 20 pip range.
20 pip range. Okay. So that's good, right? Having that 20 pip range, but at the same time, what you want to do is you could possibly have a tighter stop loss right over here, possibly like right around here. Right? Because then you're at least kind of at a 1-to-1, right? I like the fact that you put it below this rejection candle right over here, but at the same time, if you're gonna have a 20 pip range that you could be playing in, like price can easily reject this. And that's just one thing that you got to keep in mind. Price can easily reject this area and then continue right back down and do the same thing it did right here and start consolidating. Right? So having that 20 pip range, that's good. Now, if this was a 10 pip range, I would say I would wait for price to break this resistance and continue right back up. Right? But the fact that this was 20 pips, that's good. The only thing is I would just put my stop loss down here a little bit closer. And what time frame is this? This is the 1 hour. So yeah, you can easily put your stop loss below the previous 1 hour or the current 1 hour. You took this as it broke the high of the previous candles or closed.
Actually, I had a pending order, and when I came back upstairs, I was like, "Oh man, there's
okay, okay, cool." And I was gonna say one more thing. Yeah, I think I forget. But like I said, just this will be good for you journaling. Or do you journal at all? Any of your trades?
Yeah, in a notebook.
Okay, in the notebook. Good. Do you have any kind of software like Trello or Trixie that you could be posting the screenshots on?
No, I actually saved them on a 2.0 USB plugin thing.
Okay.
I'm not as computer savvy as you guys.
Well, it's very easy. If you need help trying to figure it out, just let me know and I can help you out. I don't know if I put it on my YouTube or not, but it's in my course on like how to journal with Trello and how to like do every little step that I do and put the detail in, stuff like that. I think it's on YouTube, but I know it's definitely in my course. I forget. But very valuable. Like that's how you get better. Again, I probably sound like a broken record to my guys in the group, but it's something that's going to make you much better. You can ask any of them. Some of them are in here right now, right? You can ask any of them. The second they started journaling, they started to realize things. They opened their eyes a little bit more and they started to understand what's going on. And it's a lot better for you to keep it organized on Trello because, it's better for you to come back to your trading, previous trades back in like April and see exactly what you were doing and understand exactly why you took those trades and how you were feeling during those trades. Another thing that I wanted to say that I forgot what I wanted to say, but when you place this P&L tool right here, try placing the edge of it, right on the candle that you entered, and exactly at the price point, which is obvious. But the right on the candle that you entered, it'll be a lot better for you down the road when you're trying to figure out where you entered a trade. Because sometimes I see people, take a trade and journal, and they'll place their P&L tool right here. Like, I have no idea where that person entered, right? And if I don't, I doubt you're going to have an idea down the road. Maybe you do, who knows? But at the same time, just you want to make it as easy as possible for yourself to be a better trader. And one of those things is just doing that, is journaling, is backtesting, all that stuff. But, back to, did anyone send any more charts? No.
Thank you very much. Sir.
What was that?
Thank you very much.
Oh, of course, man. What's your name? Jumby?
Yeah, Trader Jumby.
Jumby, that's awesome. Cool. Where are you from?
Trinidad and Tobago.
Trinidad. Nice, man. Awesome. Well, glad to have you in here. Thanks for sending the chart. That's how you guys get better, right? You guys want to improve, get better. It doesn't matter who is looking at your chart, as long as you get that second opinion, and as long as you can keep your mind steady, paying attention to your plan, and not let anybody's opinion sway you off of, your path and what you want to do. If you have enough headstrong space, I guess you could say, head strength, then that's good for you. Like I said, it doesn't matter who's reviewing your charts, but when you're on these live streams with either Sharma or myself, and you're sending charts, it's good to get that second, like, okay, wow, maybe I could have put my stop loss in a different spot. Maybe my take profit could be up here instead of down here, right? Or maybe, I see a rejection point that maybe you didn't see. But it's very good to get that one opinion. Once you start getting like 3-4 opinions in there, then it starts getting a little tricky. But you got to have the right mindset for taking on any kind of constructive criticism, or just looking at your charts to see what you could be doing better. So again, we're creating this higher low over here on gold, right? We ended up breaking the resistance over here. We reacted to this previous support, but we ended up holding a support, right? Ended up holding this support over here, all we coming up into 1865. Again, on the higher time frames, this is where those candle bodies closed over here, and previous support, and you guys saw it to the left as well. So that's going to be a critical level for us to reach up there, and we'll see what happens. But again, I do think that if we hold the support, this candle closes the way it does, I think the next one could create a bottom wick and then fill that candle up there, depending on the fear in the market. So let's see what we got. Yeah, so this is clean price action. You got this higher low created, nice support, strong candle, past the high of that candle. The only thing is it passed the low, so that's a sign of indecision. It's also, kind of toggling around the 200 EMA over here, but nonetheless, we got an engulfing candle right here. This candle came down, created a bottom wick, closed bullish. Again, never passed the lows, right? And we're well on our way to 1865.16, and then potentially we got that resistance right up here that we could be retesting once we break that level. Got a nice clean move. And if you want to mark this area off, you can, for a price to come up, retest this area, maybe come right back down and retest over here to then continue right back up to hold that support. Or what we could be doing, why is this so off right here? Oh, there we go. Always happens. TradingView is a great program, but sometimes I guess you can't have everything. So again, higher highs, higher lows over here. Again, fear in the market. You have the fundamentals on your side. We did have good retail sales coming out yesterday. So that's what, this downward move was. but now we're kind of recovering. There's still fear in the market from inflation, so I could definitely see a retest of this level up here. And also, again, you have a lot of Fed members speaking this week, so a lot really hinges on that. We could very well be sitting in this range over here until we get some, something coming out of the Fed that's going to move the market. All right, so that's my plan for gold over here. Higher highs, higher lows. Maybe we end up rejecting this level over here. We'll see to form another higher low to continue up, but we'll go from there. All right. So I
But did you
closed
go
50
over the fundamental side?
Yeah. If you have any articles, if you want to bring up, just let me know. But we went over all the economic data points coming out this week and what the banks were looking for, big investors were looking for. Obviously, big retail week, and we had retail sales coming out last week or yesterday, which was big for holidays. But okay, cool. So Sharma's
So
got
I'm gonna send in 3 articles that I think are gonna be important.
cool. What'd you have for breakfast?
I made crumbles, like they're the vegan protein crumbles that we
Okay.
have. And so I had that, veggies, and some brown rice.
Cool. Nice. I just forgot I canceled my Bloomberg just because I wasn't getting that much use out of it. The main
Yeah.
thing that I've been looking at for Bloomberg are the best thing or the top 5 things to look for the day, the evening briefing, stuff like that. Like that's all I've been reading, and then I read my other websites. But I
No
just
worries. If you allow me to screen share, then I
Yeah.
can just share my screen and then
exactly.
Yeah.
Where is Sharma?
raw paneer. I've never had that, like raw paneer. I've had it cooked.
Wait, what was that?
Someone
Oh,
said,
somebody said something.
yeah,
I just had raw paneer.
yeah.
How do I oh, here, I'll just do this.
Alright.
There
So
you go.
while you allow that, I'm just gonna go ahead and touch on some macro fundamentals. So before we get into the articles and all that, the key thing to realize now is that we're coming into that holiday season. We always see this rally that happens. So give me 1 second here. We always see this rally that happens around holidays. And so that time between Thanksgiving and then going all the way up to New Year's, you're always going to have this optimism kicking, and not more like optimism, but the strength that kicks in into financial markets. And a lot of that comes from businesses, the seasonal jobs that open up and businesses selling a lot more products throughout holidays and things like that, right? So sales increasing, and that's pretty much the start that we just saw in core retail sales yesterday in the US. So you're going to see the same exact thing happening for the most part in a lot of the countries, even though some countries are going back into lockdown, some countries are having stricter measures when it comes to their workplaces. Some places we're going to go over right now, like Germany, they're pushing work from home to counter Europe's COVID surge. But there are people who are still shopping, right? So there are people still who are going online and buying products from there. So as that consumer spending starts to increase, you'll see the strength in a lot of these currencies. So there's a common thing that we discussed like a couple of weeks ago in one of the weekly outlooks is the fact that you're going to see that you're seeing the same exact setup when it comes to GJ on higher timeframes that we saw last year around the same time. So last year, same time, we had issues when it came to Brexit, where they were coming up to a deadline. They weren't still able to figure out pretty much what are their agreements and what are their negotiations and how are they going to move forward post Brexit. So now Brexit went through, right, earlier this year, and then now we're seeing pretty much similar situations where both the UK and the EU, they're still having post-Brexit consequences. They're still having post-Brexit negotiations, even though it's for completely different matters or a completely different situation. It's the same thing, right? The tensions are still increasing between the two.
Sharma, are you sharing your screen?
I'm not yet.
Oh,
Did you
okay.
allow it?
Yeah.
Okay, cool.
I just didn't know if you thought you were. And I just weren't.
No. This is just things that I want everyone to keep in mind.
Mhm.
Can you guys see my screen here? No?
Not yet.
Can you guys see it now?
Nope.
Let's see here. There you go.
You're able to share though.
Stop share. Give me a moment.
Oh, you know what? Let me do this.
All right. Hopefully this should work.
Can I stop share?
You guys see it though, right? Because I just.
There we go.
All right, cool.
I had to stop mine.
Yeah, no worries. All right, cool. So those are some of the macro fundamentals I want you guys to keep in mind when it comes to global economics, right? And then I'm going to move the videos to the side just so you guys get the full picture here. So we're going to go through Germany, the UK, and then we're also going to go through inflation in the US. And then, yeah, I think that you said you went through the economic calendar, right?
Yes. Yeah, we broke down everything happening this week and what already happened. But if you want to go over it, you can.
So we're the reason why I want to talk about Germany is because that's the largest economy in Europe. So whatever happens in Germany is going to have a major impact if you're trading euro or any pair that's related to euro.
Yep.
So what Germany is doing, it's pushing ahead with tougher measures to tackle record increases in coronavirus cases, including requiring companies to let employees work from home where possible. So there's this trend that keeps going on, right? And we see it with every economy that opens up, and then they see cases dropping down, they loosen their measures, and they let people come back to work, and then they open up international travel, they open up, you know, all these different sectors because cases are dropping, right? And then you start to see this rise in cases again, especially during holidays where people are traveling right now, right? And so they start saying, well, you don't have to, for example, quarantine for 14 days. You don't have to quarantine for 10 days. Some people are saying, well, if you're, or some countries are saying, if you're vaccinated, then you don't need to show a proof of vaccination or a proof of, for example, a negative COVID test when you're coming onto flights. So these are some of the measures that were kind of loosened, right? So now you're starting to see this increase in cases again, and then these countries going right back to the previous measures that they were taking, which is work from home. People need to get vaccinated if they're not vaccinated. People, they need to show negative COVID tests if they haven't, those kind of things, right? Still social distancing, still wearing masks and all of that. So now we're starting to see, again, this whole COVID situation coming right back into play. It never really went away completely, but now it's coming back stronger. And it's this cycle that you continue to see across economies. We saw it in UK, where they opened up everything, and then they went right back to some of the stricter measures that they were having previously, or even talking about it, right, putting that sentiment out. And then we start to see that in the US as well, where now what they're trying to do is require businesses to force their employees to be vaccinated if they want to have a job, right? And a lot of the employers, they have pushed back, but obviously there has been repercussions for some of these companies as well, especially private companies. So those are just two examples. And now in Germany, we're starting to see, as cases are increasing, now they're saying like, okay, well, companies, let your employees work from home whenever possible. And this is to pretty much protect people who are vaccinated, recovered, or provide a negative test, according to the documents published on Wednesday. And then as we continue down, you're going to continue to see a lot of details here. Pretty much about this legislation that they're talking about, which is going to replace the existing emergency powers that will expire on November 25th. So keep that date in mind if you're trading any of the euro pairs, November 25th. And then you want to start seeing like, okay, how does the new legislation effects come into play when you're looking at any euro pairs in general on and after November 25th, and even leading up to the 25th? What's the sentiment like? As you continue down, you're going to continue to see some more details about this. I just kind of want to go over some of the main points, but you could just come back and pretty much just look up this article. Even if you don't have Bloomberg, you should be able to pull it up on any other site like Reuters or something like that. So now they're also talking about we urgently need to make progress on vaccinations. It's not at all too late to make a decision for the first vaccination. Everybody who is vaccinated protects themselves and others. So now how do you implement that under the new legislation, right? As cases start to increase, and they are going to increase, especially with holidays. People are not going to stop traveling. They didn't stop traveling last year when COVID was at its, so to speak, peak. They're not going to stop traveling right now either, right? Unless there's, for example, penalties that UK put into place last year, where they said you can't, there's going to be a fine if there's gatherings and things like that. So you can implement something similar, but then how do you actually enforce it, right? So you got to keep all those things into check. And so that's why leading up to the 25th with this legislation, check out the sentiment that you're going to see on the euro pairs, and then what happens as soon as the legislation comes into place after November 25th. Ireland has reintroduced some COVID-19 restrictions. So all these different regions in Europe, you're gonna get some details on that. All right, so here it is. So they're going to hold a video conference with the leaders of Germany's 16 states on Thursday. So if you're trading any euro pairs, keep Thursday's date in mind. You must focus on setting a threshold for hospitalization rates that would trigger stricter measures. So you want to take a look at what are the things that they're talking about. And as they're speaking, you will see volatility in the market. You will see volatility on the 15-minute, on the 30-minute. You will see like wick rejections and things like that. As traders, especially those who trade strictly based off of fundamentals or market sentiment, they will be the most active during that time. All right, so that's pretty much it for Germany. Those were the key points that I wanted to tap into. But if you want to read the details, then you can just go ahead and kind of copy paste this, and you should be able to find the article and some other sources as well. Before we move on, does anyone have any questions? All right, cool. So then let's get over.
This morning.
What was that?
Actually, there actually were. I was going to say there weren't too many questions this morning, but some good charts were sent in and a couple guys asking questions.
All right, cool. All right, so
How
let's
about you
get
guys
into
on
Brexit.
YouTube?
Yeah, I don't have anything from YouTube yet.
Yeah, no, I was just asking them. I got it pulled up on my iPad. See if, got Paul in here. What's up, brother?
We're going to get into Brexit now. So the UK has warned the European Union not to start a trade war if Boris Johnson's government suspends part of the Brexit settlement over Northern Ireland. So to recap what's been going on is they went through with Brexit earlier this year, and then there were some consequences of post-Brexit, and the UK came to the EU and said like, hey, can we renegotiate some of the parts of our agreement, especially when it comes to Northern Ireland? And mostly it was for the supply chain and the transportations between Northern Ireland and the UK with supplying goods and transporting goods. And the EU's first response was, well, whatever we agreed on, that's what it is. We're not going to renegotiate anything. We'll just try to see like, okay, how can we help you implement it better? So the UK comes back and you're like, well, okay, if you don't want to, negotiate anything and help us out, then we're going to go ahead and invoke Article 16. Article 16 pretty much helps. It says that one party, if anything that happens with Northern Ireland Protocol or anything like that affects one of the two parties, so the UK or the EU, then either of those parties can implement Article 16. And the other side of that article is that, well, if you go ahead, let's say the UK go ahead and implements Article 16, then the EU has a right to come back with legal actions. So that's what the UK is saying right now, that, hey, don't start a trade war with us. Don't try to, start any legal actions if we do go ahead and suspend part of the Brexit settlement, because they're doing this negotiation back and forth where the UK's Brexit representative is going over to the EU. The EU's representatives are coming over to the UK, and they're trying to talk this over, but they can't come to any common ground. And so now, obviously, both parties are getting frustrated. So the UK is saying, like, don't start a trade war, don't start any, legal cases or anything like that against us, because we will retaliate. So it says pretty much UK Brexit Minister Frost on Wednesday saying, I don't see why it would help for the response to that from the European Union to be sanctions, retaliation, and making trade more difficult. So this is pretty much the same conflict that we saw last year as well. So from a fundamental side, they're seeing a lot of similarities. And from a technical side, you will continue to see some of the similarities on higher time frames where you will see this kind of consolidated move upwards to the bullish trend for a lot of the GBP pairs. It's specifically GJ, since that's what we're trading, majority of us are trading. And you will start to see these conflicting fundamentals coming out. So I want you guys to kind of remember, go back test the same time around last year and look at what were some of the fundamentals that came out and how did the market kind of react to it. All right, so the main reason they're outlining it here, where it says that Frost calling for a fundamental overhaul of the UK's divorce deal with the EU because it has caused a decline in trade between the region and mainland Britain. The bloc has proposed concessions, including reducing the burden of custom checks, but Frost has said they don't go far enough. So they're negotiating, but again, not coming to a common ground. So if the UK isn't happy with the outcome of the latest negotiations, it has said it will activate Article 16 of the Northern Ireland Protocol, which allows either side to suspend parts of the deal to address issues such as diversion of the trade. One potential EU reaction to such a move would be to terminate the wider trade agreement with the UK. And you don't want that. You always, as a country, you always want some free trade deals with other countries. It's a lot better for your economy. All right, so that was pretty much some of the main points of this article. Any questions about that before we go ahead and move on?
So the current move on GJ is mainly a technical one at this point, since there's no major economic data coming out.
There's a lot of conflicting macro fundamentals coming out, but if you're talking about like right now, like today, then yeah, it's going to be from a technical way.
I think for this week, there's not much.
Yeah, so I guess we'll go ahead and review that too real quickly then. Right after this one here.
Yeah, sure. Thank you.
Yeah, for sure. So Powell's 5 inflation benchmarks are starting to flash amber. So a lot of central bank officials, not just in the Federal Reserve, but a lot of other central banks have come together and kind of realized that, hey, this probably is not transitory, but they're still not putting out the exact statement saying like, hey, this isn't transitory, but they're just saying like, okay, now it's starting to become a little bit more worrisome, which we have been talking about for so long anyways. All right, so the Fed Chairman Powell's inflation dashboard is starting to show some signs of overheating in the economy. From spreading price increases to rising wages is signaling more caution on the inflation front than when Powell unveiled the benchmarks less than 3 months ago. So the 5 ways of assessing the outlook for inflation. And let's see here. All right, our inflation pressure is broad-based. So he said the spike in inflation up until that point was largely the result of price rises in a narrow group of goods and services directly affected by the pandemic. That's no longer the case, right? We're starting to see supply chain issues across the board, not just for certain goods or certain products or certain services or anything like that. So it has become relatively broad-based in the last couple of months. The second benchmark is our price rises moderating in those goods and services that have experienced the biggest run-ups. So even though there were some signs that were happening a few months ago, it's no longer so clear-cut. So now a lot of the different areas were used cars. You start to see, especially like in poultry, in certain food for certain products, if they're being shipped from, let's say, China or some other country. So those were certain goods or certain sectors, and now you're starting to see the same exact effects coming into play for all the other sectors as well. So it's no longer just, you know, certain sectors, certain goods or certain products, certain services.
It was bacon over here.
let's try.
And then the third thing is wages. So he saw little evidence of wage increases that might threaten excessive inflation. Worker pay has picked up since then as employees have taken advantage of plentiful job openings to quit in record numbers in search of better opportunities. So now people are, like we've talked about multiple times, where we started to see job openings coming out with great numbers. But then when you start looking at NFP and things like where people are actually getting employed, they're not lining up, right? There's this disconnect between the two. And so what people have been doing is moving out of sectors. A lot of people moved out of the sectors that they used to work in previously before the pandemic, try to acquire some new skill sets and try to move into areas that would pay them a lot more, right? And so when you start having, think about it like supply and demand again, where you have a ton of supply of a lot of jobs that are opening up, small businesses, they're looking to hire again as things start to open up, but the demand from the employee side, from the labor market side is not there. So then what pretty much happens when you have a huge supply, but not so much demand? What usually happens if you're looking at it from a price perspective?
Anybody?
Anyone?
If there's no demand and supply is growing, then the prices are going down.
Right, so prices start to decrease, but now let's say, so that's the fundamental, right, from like for economics. So now think about it like you're an employee, right? You're a participant of the labor market. You know there are jobs out there who are looking for you, right? So now who has the control when it comes to labor market?
The employees.
Right. And so as an employee, you could really just negotiate anything that you want. A lot of people, what they do is they negotiate, for example, stocks, right? So how much stocks are they going to get? Obviously, along with the pay. A lot of people don't really care for stocks if you're not working with a startup or if you're not working with a corporation. And so they're like, no, we just want higher wages. So it's really, the ball is in your court, right? Whatever you want to negotiate. And so that's where this factor comes into play, where people who have been working 2-3 jobs just to make ends meet, you know, they're trying to learn some new skill sets and they're trying to move into sectors that would give them much better pay. And now as more jobs open up, they understand that, hey, I have the power in this case. I get to negotiate where do I want to go work and how much do I want to go work for. Obviously, if you walk up into a business and you tell them like, I want $1 million a year for this, they're not going to do it, right? But it's something more reasonable. Give me 1 second here. But let's say you're coming into a technical field and you're more like, you know, I want something around, I'm talking about California wages, 150 or 160 or 170, and your experience or your skill sets have, you know, they speak for it, then that's something that's more negotiable, right? And maybe that's something better that works for you when it comes to wages compared to the jobs that you've had previously before the pandemic. Does that make sense for everyone?
Yes.
All right, cool. Fourth one, longer term inflation expectations. Fed policymakers pay a lot of attention to what Americans are thinking about prices because officials believe that goes a long way to determining where inflation ends up. If workers and companies are fearful of prices spiraling upward, they'll act in ways that will help bring that about. If employees will press for outsized wage gains, while companies will be quick to jack up prices to cover for their rising costs and then some. So all of this comes right back into why market sentiment is just as important as any other type of analysis that you will be doing. If you expect, for example, you walk into a store right now, and any of you guys can answer this, but let's say you walk into a store right now and there's like, for example, toilet papers, right? I'm just going to use that example because that's something that we have seen in the early months of the pandemic. So for toilet paper, let's say, for whatever reason, you have the sentiment that we're going to run out of toilet paper and the next coming, let's say, a month or maybe a month and a half. What do? It's a necessity for you. You have the anticipation that you're going to run out.
You go and buy as much as you can.
Right. So you go and you buy as much as you can. Now what's happening to the supply of that toilet paper in that location?
There's not enough.
And the demand is high, right?
Price inflation.
Right. So now prices start to increase. So let's say there's nothing that was ever going to happen with toilet paper. The supply was going to stay the same and everything like that. But it's the sentiment of the consumers that led to increased prices. And that's what they're talking about here. So if as workers, you think like, hey, prices are going to continue to increase and things like that. So then what are you going to start doing? How do you make sure that you can afford those increase in, let's say, living costs?
You ask for more.
Right. You ask for more money. And let's say there's absolutely nothing like core evidence that indicates that living cost is going to increase. Right. So now what you really just done is you had this anticipation as a sentiment, and you thought, prices were going to increase for whatever reason. You go and you negotiate, you ask for higher prices as a job, or as an employer, let's say, that's an expense for you, right? Paying employees a lot more. Well, then how do you make up for those expenses?
Increase
You
the
need
price of your
employees.
goods.
Right. Increase the prices of your goods. So you guys start to see pretty much what they're talking about here. Make sense?
We're all just hyping each other up.
Yeah, and it's sentiment, right? So once you can start to understand that sentiment and where is it coming in play from, all of this, it gets a lot easier. You will continue to see the same exact fundamentals coming out over and over and over and over again, and you'll know exactly what's going on. So right now, they're straight out flat telling you inflation expectations among consumers and investors have risen to their highest levels in years as price rises have accelerated, especially for gasoline and other energy products. And then the fifth benchmark is our longer-term global force is still pushing down inflation. So inflation has generally been low in the US and across much of the industrial world. Powell has ascribed that to a variety of structural factors, including technological advances and globalization, argued they would continue to act as a check on inflation even after the pandemic is over. What I want you guys to do is understand what this last benchmark is, and then go take a look at the new bill that they just passed. And how does that play into their Build Back Better plan of the Biden administration? It's going to start making so much more sense. I'm not going to give it out just right now, but I will do that in another video, maybe like later this week or even in the weekly outlook for next week. But I want you guys to take a look at this benchmark, go read the new bill that they just passed in the United States, and then how does that play into the bigger picture that the Biden administration has been looking out for?
Hey, Sharma, is there anything that like you could put your finger on as to like why high inflation like this is a good thing?
It's not.
There's no reason why this would be a good thing.
The reason why inflation is good when you're sitting in this economic cycle of economic growth, right? And so when inflation comes into place, it's kind of helping you move. And I'm actually going to annotate just.
There's a high demand for things.
So this is how the economic cycle looks, right? It's just literally like this. This right here is your peak. This is your economy, maximum employment. You have, great growth and everything's amazing pretty much, right? At this point, you have a peak performing economy at this level right here. After this point, once you're sitting at a peak, well, from a technical analysis perspective, what happens when you hit a resistance?
Reject.
You reject and you come back down. So let's say, I'm going to use an example of employers. You're an employer, you are hiring as many people as you can, and you're paying as much as you can, and everyone's pretty happy and everything like that. But now you've hit this resistance where it's like, you can't increase the prices of your goods because you don't have anything that would support that. Like if you were to increase the price of your product by $1, it's not going to sell. You have the data from the past, let's say 4 or 5 years, to kind of help you support that, right? So you can't increase the prices. Your expenses are staying at the same level. How do you maximize your profits? What's the very first thing that employers let go of when it comes to expenses?
Overhead,
What was that?
Employees.
Employees.
overhead employees.
So employees, and then you start to see, well, that's like the spiraling effect. So you start decreasing your employees eventually to kind of maximize your profits a little bit. And now this starts to set in a fear of, let's say it's just a community of how many of us are, like 20 here. So now it starts this like sentiment between the 20 of us, like, hey, Stefano's just got let go by his job. The chances are that I'm next. Right. And then the chances are that somebody else is next. The chances are that somebody else is next. So there's no actual data that came out that said like, hey, let go of your employees right now because, you know, this is what's going to happen in the future. It's just a sentiment that started off with one event. This is where you start having that pushback down happening, right? You need to start seeing this is the lowest point in your economy. This is when things are cheap. The central banks make them cheap with their interest rates and everything like that. They try to spike up, for example, consumer sentiment about the economic growth, and they try to spike up consumer spending by any ways that they can. Now, what inflation does is this is your economic growth phase right here, right? What inflation does is it starts to increase the prices. And the only reason why it's good in this cycle is because it's moving parallel to the actual economic growth that's happening. Where we are sitting right now is at this level, and you have a high inflation problem. So that's why it's not good right now. But the reason that's being given that, hey, high inflation right now is good, is that when we start to increase interest rates, and again, the relationship between inflation and interest rates is inverse. So if you want to control inflation, then you increase interest rates. How do you increase interest rates when you're sitting at this level where your consumer sentiment is not even improving? Where in fact, your consumer expectation is that inflation is going to continue to rise. Things are going to continue to get more expensive. So no, when you're sitting in this little phase, inflation is not good. But the reason that's being given is like when we increase our interest rates, then we're going to sit at this average rate of 2%, which we have been targeting for years.
Yeah, that's that sweet spot right there, 2%. Yeah, no, the reason I ask is just I keep seeing these articles in like US media that just keeps pushing that this inflation is good, and they don't understand that there's no growth at the same time. So that's stagflation. There's no production. There's no, you know, we have a supply chain issue that's terrible right now. It's going to be even worse in California, which I think they put a policy in where you can't unionize truckers or something like that. You may know more than I do out there.
Yeah, I mean, they're putting into effect a lot of these, I guess, policies, if you want to say it like that. But again, look at the bigger picture. How's it really helping you out? It's not. So these structural factors that they're talking about, for example, like in that bill, a lot of the money is going, not majority, but like, you know, a good amount of it is going to clean energy and like EV and things like that. So as soon as there was news about that bill being passed and a lot of people being in favor of it, you actually saw a lot of stocks when it comes to like equity markets, a lot of stocks related to electric vehicles, you know, clean energy and things like that, increasing in prices because that optimism kicked in. But as soon as that bill passed, you know, just a few days, just very recently, you saw all that coming right back down. And that's the sentiment, right? That's the entire sentiment that's coming into play just by these fundamentals are being pushed around. So look at the bigger picture because that's what you're focused on, right? We have been looking at the bigger picture for how long, Stefanos, when it comes to this inflation thing, overheating, and you know how this is not just transitory and everything like that. So we saw this coming like 3 months ago when they first started talking about it.
And also think about it. They first started talking about it back, and we saw the drop on gold in June, around June 16th, right? So they started recognizing it. Some FOMC members saying, okay, maybe I'm a little bit hawkish right now. We may need to increase interest rates because inflation's starting to come in. Now, that's when the Fed started talking about it in June. When did we start talking about it? We started talking about it way before that, maybe April, March.
Yeah.
Maybe. Was it?
Exactly.
I mean, it was definitely
Well,
early on.
it
Doesn't matter
was
when.
definitely right when they started mentioning it, we knew what was going on.
Yeah. Yeah.
Right. And
Well,
this
it was-
entire time they were pushing the sentiment of like, no, this is great. This is great. And then 3 months later, what do you see happening? Like we are prepared for this because we understood how does the fundamentals play in the market sentiment? How are they playing the market sentiment? They never confirmed anything. They said we might do this. We're thinking about doing this. The discussions are going on about
all
this.
sentiment.
They never confirmed anything.
Yeah.
They played with, they're playing with sentiment. And then now how does that play into the technical analysis?
I would give it about a month that we were kind of ahead of them, at least a month, knowing like inflation starting to set in. And the sad part is, first of all, when the Fed has these conferences, most Americans aren't watching this anyway. These are all economists, investors, central bankers. They're all watching what Powell is saying. Now, say you're an ordinary American that doesn't pay close attention. Maybe you work at a ice cream shop, something like that. You don't pay attention to economics or what Powell is saying. But let's say you did, and you didn't actually truly understand what inflation was and what sets it off. He's either lying to you or he just doesn't know what they're talking about. They don't know what they're talking about. But what they're doing is hiding what they've been doing. They're causing the inflation. Now, it had to happen because of COVID. Right? You had to stimulate the economy. You had to do these things. Did you have to give away that much money? Maybe not for that long, maybe not. But like now you're starting to see the trickle down effect of what's happening in the country and in the global economy right now. And we're just kind of, I feel like we're on the brink of a crash. Like you feel like we're there. I feel that energy of like,
we absolutely are, because that's the
coming.
bigger plan that has already been introduced by the administration, which is their Build Back Better plan. Right. So I'll give you guys another thing where recently in the US, we had the debt ceiling being increased, right? Following the debt ceiling being increased, what just happened when it comes the new bill? You just had $1 trillion worth of bill that was just passed. Right? Injecting more money into the economy. You're already having problems when it comes to your debt, paying back the debt. Now all you're doing is putting more money into the economy. That's going to get voted on again in December. What do you think is going to happen? They're all of a sudden going to be able to pay back their debt? No. Right?
Yeah.
So now look at how, and then also inflation. How is that going to affect inflation and the 5 benchmarks that they're talking about? Right? So like understand like all of these work together. There's no like one separate, there's one inflation data that's coming out here and that's just completely different. And then you have something else here, you have something else here. It's a big picture. And then there's small components that make up the big picture.
The economy is a giant machine. The global economy is a giant machine. It's got oil, it's got, lighter fluid, windshield wiper fluid, all these different things that you got to add to it and pull away from and see what's change the oil, stuff like that. Like it needs maintenance and you got to make sure that it's a healthy economy with good policy. And unfortunately, like forget politics, take politics out of it. You want to make sure that your country is receiving good policy and you're signing good bills that actually make sense. And unfortunately, right now, too much of what's going on just doesn't make sense to the people really paying attention to what's going on and understand economics. Like when they say inflation is going to be transitory after supplying the economy with 20 times the amount, I think, what was it? The stat of the amount that we've supplied in the last year and a half into the economy and stimuli of the economy. 20 times the amount of printed dollars came out in the last year and a half. When that happens, you're going to see mass inflation, and we're just in the beginning of it.
Absolutely. All right. So just to review the economic calendar real quick, I'm pretty sure Stefanos has gone over it. Some of the important stuff that has come out, pretty easy start, right? And then you had the monetary policy report hearings from GBP coming out. You have monetary policy meeting minutes from the Aussie. And then you also had the RBA governor speaking on Monday. So you had, a couple of fundamentals picking up the week. Yesterday, you had core retail sales coming out and retail sales, right? This has set up for a lot of the pairs that people have been trading, especially for gold and the volatility that we see on GJ and everything like that. So core retail sales I just want to clarify this because I did get this question a lot. This is not anything to do with prices, retail sales in general. This is in the change of the total value of sales at the retail level, right? So the question that I was getting is like, well, if this is increasing, then why is this helping out, or why is gold dropping, right? Why is this helping out the dollar? If this was a change in the price of goods at the retail level, that's a completely different story, because now that means that things are getting more expensive. This is changing the total value of sales at the retail level, which means that a lot more goods are being sold. So people are still going out, they're still spending money, right? And a show of strength from US holiday shoppers. We are sitting in that period of time now. We're getting there where people are going out and they're spending a lot more money because it's holidays. You will see the strength coming in for a lot of these currencies. So start to expect that, right? This is not changing the price. This is just changing the total value of sales. A lot more sales being done on the retail side, which is obviously going to give you strength when it comes to the dollar. Dollar and gold historically have had an inverse relationship. So that's where you saw that drop coming back down from, where you had a major increase from previous compared to actual, right? So forecast, this is what fundamental market sentiment traders use, the previous versus forecast, but this is what you really want to be paying more attention to, because like we always say, trade the reaction to the news, not the actual news. And then today you have CPI data coming out in just a couple of minutes for CAD. So I do expect this just to have a little bit of effect on some of the other pairs, especially US pairs, just slightly, since it's a high impact news, but I'm not expecting too much where it's going to change anything on higher time frames. And then a ton of FOMC members speaking today. So that's something you want to be watching out for. I would highly suggest by like 6:30 a.m. So like in an hour or so, or maybe an hour and a half, like pretty much just, if you're in a trade, go risk-free, take your partials. If you're not if you haven't taken a trade, then I would just watch what the markets are doing for the rest of the day, because you will see a little bit of volatility coming in. These are all FOMC members. So whatever they say does play into the bigger picture of what's happening in the Fed. If you start to see this back and forth that's happening, where some of the speakers, they're saying one thing, but another speaker is coming out and saying another thing, that's uncertainty within the Fed itself, within the Central Bank of the United States itself. Then going into tomorrow, as every Thursday, you have unemployment claims coming out, and then you have FOMC members speaking again a couple of times throughout the day. And then you have the consumer confidence from GBP in Asian sessions. This is something that you want to be paying attention to when you're trading any of the GBP pairs. And then Friday, you have the Treasury currency report, FOMC member speaking, ECB president speaking. So you're starting, you started the week off pretty light and then picked up the pace. And now you're doing the same thing where you're dropping back down, and then you're ending off at a good note on Friday. All right, so if you want, you can go ahead and share your screen again.
Sure.
Anyone have any questions?
See, this is what I was kind of talking about, Sharma. MSNBC columnist says current inflation crisis is actually a good thing. I think she got a lot of heat for this, but that's kind of why I was just asking that. Like, is there any reason why that would be a good thing right now, and not, maybe in a growing economy?
Yep.
We went over all this. You guys know our stance.
You entered the trade this morning?
What was that?
Did you enter this trade this morning?
Yeah. I'm actually really happy with the way I managed this. I took this based on the 1 hour. I broke this down before, but obviously in a bullish trend, we broke 153,600, this resistance that we had over here. Just been in a bullish trend. I caught part of this move yesterday, but we ended up making this high, which I didn't realize till this morning, but we got that trend over here that we're now meeting up with, right? Since reaching 158. So we ended up getting a hard rejection. Looking at the 4 hour right here, I'm just going to take all this
right into that level. Yep.
So yeah, we got that hard rejection over here, closed like a doji, but still closed bullish. And the previous candles were passing the high and the low of the previous ones as well. So you got a lot of indecision over there, but we're still in that bullish market with a clean move to the left. But again, what I was breaking down before was the reason we reacted to that level. And this was my first TP for my trade over here, was not my first TP, but my main TP, because we have that rejection all the way to the left as well. If you take a look, and then you could go even farther back. But that's what we were looking at this morning. But as the 1 hour over here ended up creating that top or creating the high, we come right back down to create that rejection wick with that clean bullish close. The next one came down, created its bottom wick on the 1 hour and passed the high of the previous. That's where I entered. And then once we started coming down here, I was actually breaking down the economics and the charts for them. I ended up going in a drawdown. I was noticing it, but I was still confident because it wasn't passing the low of the previous 1 hour.
Yeah.
So once price snapped back and came back to my entry, that's where I closed 50 twice. And then once we started hovering around here, around, the 30, we ended up closing like this. The next one closed bearish. I ended up closing somewhere around here, about 2 pips in drawdown. So,
Cool. I entered mine yesterday for a swing trade at
Awesome.
154.04.
154.04.
Yep.
Beautiful. And I'm guessing right over here.
It was based off the 4 hour time frame.
Okay, 4 hour.
Yeah, so
Right here.
that break and retest, and the stop loss was right at that support down here,
I think that was my trade too. Hold on.
right here.
Where? Oh, beautiful. Yeah, this is
Price
a great
push up.
setup right here.
Yeah, so I waited for price to push up, and I wanted to see candles closing above this area, right? Because this is a level that I saw getting rejected off like the daily and even the weekly, specifically with wick rejections. And so the candle closes, the following one, same thing where it's like making that top wick, rejecting the area, and then came right back down. After candle started closing down here, created another support on lower time frames, and we started pushing back up. It pretty much looked like that bullish move that we look for, right? That basic bullish trend that we try to go for. So after price made a support, I entered at 154.04.
Sorry about that. Yeah, it's beautiful. I entered at 928.
A question on this one.
Yeah, 928 right here.
Do you think it would be based on how the 4 hour candles are moving? It looked like we were going to settle in on that previous 4 hour resistance, and there seems to be still good volume, at least on this candle. Do you think that a scale in is reasonable to fill the previous 4 hour candle, that long bullish wick?
Yeah, so if we can get a possible entry in the next 15 minutes or so, then yeah. I would not trade the last 15 minutes of the 4 hour time frame though. I would just wait for a new candle to form. So if the current 4 hour can show us some volume and continue above this 154, 200, 300 area, then we're pretty much set to continue bullish.
So guys, with this clean move to the left, like this should give you confidence along with the fundamentals of the pound as well. All right, so last night, this is what I took, where we created this high, we come down, retest, beautiful retest of 153.600, and we ended up creating a new high, right? What do we do when we create new highs? We come down and retest if we're in a bullish market, and then we come up and retest that high. So that's exactly what I was banking on over here, and this was that level. That was my first TP, which is what I took over here. Like I ended up securing up here, leaving a runner, stop loss at break even, and got stopped out with that wick right over there. If you could see that, I'll zoom in a second. But the reason why my TP was right over here was we had another level starting to come into this area over here. Right, we started to have rejections around this area, around 154, 300 psychological level as well. So that's where I wanted to take profits, especially because it was the Asian session. But give me 1 second. Let me use the bathroom.
Yeah, no worries. So while Stefanos is saying that, another thing I want you guys to notice is along the way, the market is simply collecting orders, right? So last time we had clean moves of simple just push with volume was back down here. After that, you got stuck in this consolidation here. And then even after that point on, all market is doing is correcting every time it has any sort of impulsive move, right? This entire push up. This is market collecting orders while maintaining a bullish momentum to the upside. Usually there are only two things that happens here. So a massive push up, coming back, retest, and trying to continue up, where there's going to be, after you break past, a specific level, especially when it comes to the daily time frame, the weekly time frame, or even the monthly time frame. If you're sitting at some of the key levels and you have fundamentals that come out to help support with the move, you will copy the same exact move, something like this, but with great volume to the upside. Or you start hitting some of these resistance areas as the market is starting to collect its orders. You start to see this uncertainty where every time there's any sort of impulsive move, it's a pullback. And then you see supporting fundamentals and then pushing right back down. A move like this is setting up, or this is the market trying to pretty much price in any market sentiment or any fundamentals that are about to come out. So when you're looking at moves like this, that's pretty much what I want you to think about, and then go back and back test it too, right? So just don't take our word for it, but go back and back test it. So you're understanding exactly what's going on here each time. I'm gonna get my trading view on my other screen.
All right, can you guys hear me? Hello.
Yep.
All right, awesome. I wanted to rush back. I just entered this while I was in the bathroom. This is a great opportunity right here with that 830 volume. I entered dynamic risk where I didn't use my full risk because the 30-minute candle could retrace. We could get a better entry after the 30-minute candle closes because we do have 2 minutes left. I entered with 4 minutes left to get this little push over here. But as you can see on the 30-minute, this candle grabbed liquidity, right? Started pushing bullish, flipping bullish. We normally have great volume around this time. We passed the high of this candle. That's where I entered one position, and we started passing the high of these. That's where I entered another one. And this is my last trade for the day. You guys already saw me take a trade, right? Managed it well. And this is the second one. If this one doesn't work out, I'm definitely done for the day, but done for the day no matter what. But this is just a great opportunity for you to take this. We could get that retest, 154,600. I'm just glad we're able to take a trade finally with you guys. I think we've done 2 of these so far. This is the 3rd live session. Yep. And both of them have been a little rangy, which is obviously nobody's fault. But now we finally got some setups going here. Is anybody in GJ right now?
Yep.
You are?
Yep.
Yeah, I'm headed for my first partial at 154,800.
There we go. Good shit.
So
Beautiful.
currently about 40 pips into profit. First partial is going to be at around 75 pips.
Oh yeah, well yeah, you have that swing going.
Yep.
All right. Beautiful. Let me just check YouTube real quick. How are they doing in there?
They're good. I haven't seen any new questions or anything like that yet.
No new questions. All right, 30-minute candle closed. Nice, strong, bullish candle over here.
No questions at all? YouTube just chilling? Can you drop down to the 15-minute time frame real quick?
Yes. All right, 15, right. There you go.
Just extra information, you know, nothing too much, but if you zoom out a little bit, all right, cool. So what I want you guys to notice here is a question that I got yesterday was, how do you know that price is in consolidation or it's heading towards a consolidation? How do you not trade a range? So in this case, I start off with like the most recent resistance or support. I would usually start off with like the daily or the 4-hour and kind of work the way down, but pretty much you're going to have the same process regardless of whatever time frame that you're looking at. So on this 15-minute time frame, for example, right, what you want to take a look at is this is all consolidation, right? So what I would do is I would first start off with, give me 1 second here. Here you go. What I would do is I would start off with like, okay, what's the resistance that price is rejecting and what's the support? So after price pushed above this, we had a nice retest, right? So we had a nice momentum coming back up to, let's say, this 154,300 area. This was the first area of resistance that price made. Cool. So we've already retested this area, created support. So now you have that support right here, retesting the previous resistance, you know, right into these areas. And then you also have the first resistance up top here. So now if I want to wait for price to, you know, break out of this consolidation or make sure and confirm even that this is a consolidation, I'm going to start to draw like a rectangle or line or whatever you want right into these areas. So if price fails to break out of this area, that's consolidation. Every time price does a break and retest, know that you have a limitation on your trade. I'm not saying you can't trade this. Absolutely you can, if your goal is only 10, 15 pips or so, but understand that you're not going to turn a trade like this into a potentially a swing trade opportunity, a day trade opportunity, until you get a break and retest above this consolidation here again. If you get a break above this consolidation here again without any sort of retest, that's a fake out. You're coming right back down. This is market that collected orders in here, even if it's just the 15-minute time frame. You need to wait for a retest of it some sort, right? So if you're going to look for a trade opportunity here you got your break and retest, understand this is the farthest that your trade is going to go. You could absolutely leave runners and maybe even trail your stop loss, but there's no reason for you to, you know, maintain the same exact stop loss. Price is tapping into a resistance that has been rejected multiple times in the past and still think that price is going to continue in your direction, or you're going to turn this into a swing trade. Right here, after price broke out of that consolidation without any sort of retest, you came right back down into it. Right now, same thing here. You broke out, price came back down, created a support here. Now, well, where's the last resistance that price made? Up top here, right? You could consider this. You could even consider the wick fill right here from the 4-hour time frame. But the point being is now price broke out of it. This is the healthy retest that we're looking for. You got a nice bullish close, made a bottom wick rejection right here, and now you're continuing back up. Now you have great trades to the upside here again, and that's what you want to be looking for. But understand that this is the restriction of your trade at this point. And then as price, you know, breaks and continues bullish, then you would do the same exact thing. Same thing back down here. This is like mini consolidation that you have being formed right here. Same thing. If price breaks and retests above that, then you have a great trade opportunity. Broke out of it, no retest, comes right back down into it. Breaks above, gives you a retest, and now continues back up. Understand that this could be your limitation of your trade. That's exactly where price came back down, consolidated, broke above, and then consolidated again. You will see the same exact thing on regardless of whatever time frame you're looking at. But that's how you kind of figure out that, okay, price is going to start ranging. If I was looking at this in the morning, let's say right when New York was opening up or something like that, and I saw that even a market open with news couldn't help me break out of this area with volume, retest it, and then continue up, the chances are we're just going to end up consolidating. And that usually happens when there's high impact data that's coming out.
Well said.
Yeah. So
Hey guys,
someone wants me to go over my swing trade on GJ real quick.
Awesome. Before we get to that, just a quick question. While we have you guys on here, is there any subject you guys want us to go over on the podcast? Anything specific that we haven't covered yet that maybe you're having issues with right now, and we could either help you right now with a quick insight, but then do a 30, 40-minute podcast about it.
Nothing yet.
Where can I find a podcast?
Oh, YouTube.
It's the secrets of trading.
Yeah. Secrets of Trading. It's on both of our YouTube channels. You want to take a look.
Thank you.
I think I've uploaded from the, the actual file. I've uploaded a bunch into the course as well on Teachable.
I just have a channel in my Discord with basics of Forex and secrets of trading. I just
Nice.
upload everything on there. Yeah.
Awesome.
All right, cool. So I'll break down my GJ trade. If you want to go up to the 4-hour time frame for me, Stefano.
Yeah. I'll just take this off right here. You can
All right.
let me know if you want me to scale or
Yeah, if you want to make it a little bit smaller.
like
I want to
this.
see the I want to see the consolidation and then the break and retest as well.
Yeah.
All right, perfect. All right, so yesterday, end up taking this on this 4-hour break and retest. So the way that it went down was you got that nice consolidation down here. Obviously, don't trade the consolidation. Same thing that we just talked about. Wait for price to break out of the consolidation, give you a retest, and then continue back up. So in this case, I'm just going to point this out on the 4-hour time frame. But as I'm pointing this out, I want you to go to 1 hour, 30-minute, 15-minute, and then check out what's happening there. But pretty much at this point, you had a nice bullish close, right? You cleared all these wick rejections here. You obviously cleared the resistance and everything like that. A ton of bullish volume to the upside, no bottom wick rejection whatsoever. The following candle comes and creates a bottom wick rejection. Continues right back up, same thing. Where on lower time frames, you will see support being formed and price continuing back up. But I want to see a break and retest on the 4-hour time frame. Why is that? Because the 4-hour time frame is the one that showed me this massive consolidation here, right? So I want to see that break and retest on the 4-hour time frame, which will help boost that confidence to the upside again. So then we wait for that consolidation we were talking about. So I start off with the 4-hour time frame. I create my resistance here, and then clearly price came back down, and this is the area that I'm looking for price to make support into, right? So respect this broken resistance as support. So this is the range that I'm looking at. I want to see price breaking out of this resistance right here and then continue back up. And that's where I'm going to be looking for my potential trade opportunity, right? So that's the two levels that I mark off. Then what do we see? We see this break and retest where price comes all the way almost down right into this range, creates a bottom wick rejection. Cool. We've rejected all these wicks right here again, right into that range. And now we're pushing back up. We create that support here now. So every candle formation, I'm going to treat that as some sort of break and retest. I'm going to clear that out just so you guys can see clearly. So now this is my range. What I want to see is, okay, candle closed here. Now I'm going to drop down to the lower time frames. So before we drop down to lower time frames, Stefanos, can you just create like a line for me right here and down here as well?
Of course.
Perfect. Now we drop down to lower time frames. So 1-hour time frame. All right. So I think these are the two lines that we made, right? Cool. So on the 1-hour time frame, well, what do we have happening here? You got a nice close. You got a break and retest and continue to the upside, right? After price makes that bottom wick, now we're continuing to the upside. Okay, cool. Now this is the first area that price is going to tap into. You got that nice consolidation. You got a nice wick rejection right here. So as soon as I saw that break and retest here, that line is at 154.005. My entry was at 154.04. So I took an entry right at that break and retest as price was continuing bullish. Since this is off of the 4-hour time frame, that's primarily what I'm using as my confirmation because this is a swing trade. My stop loss is going to be right below that 4-hour support, which is pretty much down here. Right, so I use the 4-hour and the 1-hour time frame as I use the 4-hour as confirmation, the daily time frame as confirmation, and then I use the 1-hour as my entry. We push up, and now the first partial that we're going to look at is going to be at 154.800 as we continue pushing bullish. So now if we go back up to the 4-hour time frame, after doing all of this, there's another break and retest recently, or at least on my side, it shows a break and retest. It shows me this candle as bearish, as a break and retest, even with my broker. So what pretty much just happened is you had that resistance, a break and retest from at least like, I'm looking at Owanda, not FXCM, but got a break and retest here. And now we left this entire range for price to come up and fill up again. So nothing like too crazy, literally just using multiple time frame confluence.
Awesome.
Yep.
Where's the chat so big? So we're taking a look at what's going on right now with this trade. The 1 hour, you know, obviously past the high of the previous, it's starting to flip bearish over here. So this is something I'm monitoring, but we are still respecting this support, right? And again, I went low risk, dynamic risk over here for a reason. So we'll see what ends up happening over here. Let's see if the 30-minute ends up closing bearish or passing the low over here. If that's the case, then I'll be closing 50.
If you go back up to the 1 hour real quick.
Sure.
So the way that I would analyze this, like every time a candle forms, a wick rejection happens or anything like that, I'm always analyzing what's going on in the market, right? So you got that consolidation even here on the 1 hour time frame, right? And then when price broke out of it previously, you got that resistance that's actually being formed. You have all these, you know, buyers who got rejected, but the actual resistance being formed right there. Comes back down, grabs that liquidity right from this the real consolidation. Candles printing side by side, right? Creates a support, continues pushing back up, comes right back down. Well, where did this 1 hour candle come right back up and reject? Right into that.
Candle body highs.
Right? So that's the first restriction of your trade. You want to pay attention to that 1 hour time frame. If you're looking for scalps, if you're looking for day trades or anything like that, you want to be paying attention to 1 hour. Cool. Well, as long as the support here is being held, then there's nothing from a technical way that's telling us that I'm going to just that price is just going to continue in the opposite direction, right? There's like no lows being broken or anything like that. You just need price to respect this area of support. So even if this candle closes like this and the next candle, all it needs to do is make a bottom wick and then continue pushing forward. That bottom wick is going to give price enough momentum to push past this minor resistance right here and come back and fill that wick right here.
Let's see what happens.
Yep,
Great breakdown though. Yeah, we had that rejection of the candle body highs over here. I was actually thinking about securing somewhere up here, but I'm still confident in this trade. I was confident in this trade to continue right back up. But again, just keep in mind we have a significant level over here that we're paying attention to, key level where that wick ended up rejecting as well. So we could very well continue bullish, but we could always consolidate in here as well.
Yep. And we have 15 minutes until NYC opens up.
Yep.
Stock exchange.
Coming from hyperbolas. So Kat gave a good suggestion for the podcast.
Common setups from high probability to less high probability.
Yeah, we could put something together with that.
Yeah, for sure. All right, we got the new 15 opening up. So what I want to see is this 15-minute going to break below the previous 15-minute lows and then continue pushing down?
Keep in mind, you got the 50 EMA forming a support or holding a support right over here. So if you close below that, then you know we could be coming down and retest this low over here and enter this consolidation again. Can you guys hear me clearly, like right here, or how about right here?
Both is just you're a little bit louder when you're closer to the mic.
Okay. Messy price action.
Broke the highs and it's flipping bearish.
Yeah.
It hasn't broken the low, so I'm interested to see, is it going to break below that 154.288 level that you have marked off?
Yeah. Sharma, what platform do you use to trade stocks?
TD Ameritrade.
Oh, okay, yeah. Do you use Ameritrade or do you use Thinkorswim?
I use Ameritrade. I have the app on my phone.
Oh, cool. Okay. Yeah, I got into Webull recently.
Webull, yeah, that's a good start. I like that better than Robinhood personally.
It's very aesthetically pleasing.
That too.
Yeah, I mean they're just their functionality and like it just seems way ahead of even Thinkorswim, which Thinkorswim is you feel like you're in a rocket ship in that thing, and it's a lot of information, but at the same time it's very far behind when it comes to technology and aesthetics, whatever you want to call it, with apps and stuff nowadays. And Webull's only 3 years in, and they're like way ahead of functionality and everything when it comes to some of these major brokers.
Yeah. What I personally go for is like, does the broker have everything that I look to trade? So TD Ameritrade, for example, has Forex, it has stocks, it has everything else that I like to trade.
Does it have crypto?
So, crypto, I haven't actually invested in crypto when it comes to TD Ameritrade. I just go through Voyager because Voyager gives me interest on any crypto that I hold on to.
Oh, nice. Okay.
Yeah.
That's nice.
We're kind of just hanging around that area, so we haven't even broken the low.
Yep. Well, indecision. Yeah, 154 300 is serving as a solid support right over here. Let me see if that's marked off.
I will have to head out in 12 minutes though.
Sure.
I have to go to San Jose again.
Okay.
Yeah.
So that's every Wednesday?
It's recently the meetings have ramped up because we're getting closer to launch.
True. Yeah, how you guys doing?
So it used to be every Friday, but now it's 2 to 3 times a week.
Wow. Beautiful. Killing it as always. How's the black belt coming?
That's pretty good. Ian's here. Ian's my trainer.
Ian is?
Ian, yeah.
Get out of here.
Ian, you're like a 4th degree, right?
5th.
5th. There you go. 5th degree black
Clears
belt.
his throat.
Yeah.
That's great. Awesome, man. Good for you.
Yeah, so he gave me an entire training plan. So we're working very closely on that and then getting tested in May.
Nice. Now, is this Taekwondo, karate,
No,
jiu-jitsu?
karate.
Okay.
Yeah.
Yeah, I grew up doing Taekwondo and then wrestled in high school. And then when I was done playing football in college, that's when I started getting into jiu-jitsu, boxing, and just regular MMA. Just training I was training. That's when I broke my leg because I was training almost 3-4 times a day in between classes. And just overtraining your body, you're going to get stress fractures. So it was a nasty one.
Yeah, we kind of incorporate. I mean, I trained for a very long time and then I went off to college. But before I left, we were doing like grappling. And then we also had like the kickboxing classes. Did Hyper Fight Club start before I left, Ian, or did you guys do that after?
Its original form was that fitness kickboxing class. And then after when the pandemic hit and we had to restructure, then we decided we would put it on, phase it out.
Okay.
Yeah, how did you do? Oh, I'm sorry.
Yeah, so I did like all those trainings before I went off to college. came back, and then Ian and I used to like get up and train like 5:30, 6 o'clock in the morning, right?
Oh yeah.
And yeah, so we used to do that too. And then now I think it's only for second degree black belts and higher, right? For grappling and all of that. You're not really testing first degrees on that.
Yeah, because we haven't started doing the full on, because you know how close you get when you grapple and you're in
Yeah,
someone's face.
yeah.
Yeah, I was gonna ask, you know, how you guys were doing during COVID, and like how you guys managed that, and plus you're in California, so it's probably even harder.
Oh, we were worried. It was definitely a come to Jesus moment, and as things started to open up, we definitely had to be open. You would consider us a more traditional school, maybe, but open to like modern innovations, and because of our market, there's very many parallels between trading and martial arts, which
Oh
is what
yeah,
I
100%.
enjoy. But now these days, since we opened up, everyone, I mean, that was the silver lining with COVID, was it really made everyone think about their role and how much effort, because we were, you know, bags were packed kind of.
Yeah. Wow.
But things are actually, they are better than before COVID. So can't
Wow.
complain.
There you go. Gotta keep that faith.
Something.
Yeah, I think along with a lot more things, but I think there's a huge correlation between sports and trading, sports and business, business and trading, obviously, which are basically the same thing. But that correlation, like if you guys are previous athletes or current athletes, I'm sure you understand exactly what I'm talking about. And it's a cool transition to bring you over. And also, like if you haven't gotten into athletics or haven't gotten into martial arts, you want to figure out a way to defend yourself. I think everyone should have that basic skill. Then if you're a trader right now, that'll translate right into your martial arts as well, because trading trains your mind, and it trains your mind to be completely in control of what you're doing in the moment. And that's huge for jiu-jitsu. And I'm sure it's huge for karate as well. And like just
It's
critical thinking,
massive.
making the right decisions, all that stuff. What was that?
It's massive. And
Oh yeah. Yeah.
I was talking to Ian like the first time I got back from college, like the parallels that I got to see between like my training and like, you know, everything else that I was doing, but also like how it shapes you as a person too. So, but karate is a very it's like a physical contact sport, right? You're going to get hit. And we personally, what we do, we control obviously, but you are going to get hit. And it's kind of that taste of like, get used to getting hit. Because if you're on the street, no one's just gonna like kind of tap you and go away. They're gonna hit you.
Oh, yeah.
So we condition ourselves for that. And so that personally for me, when it comes to trading, like that has helped me push away like the emotional aspect. And no matter what I do, I'm gonna take a hit. Whether it's like physical in karate, like I'm gonna have to figure out, like, you know, get over it. You are gonna get hurt. You don't just sit there and kind of like cry about it that you got hit or kicked in the face or, you know, whatever it is. You just move on, right? It is gonna hurt, whatever, but that's kind of the emotional training, I guess, you kind of go through. And it's the same thing in trading too. Well, yeah, price is going to go against your way. Like it's never 100% going to go in your way. You didn't create the markets. You don't know how it works all the time. So yeah, take that hit, small hit, but learn how to control it and then continue moving forward.
100%. 100%.
Yeah, I think the parallel right now is, you know, my hands get itchy and I want to place a trade, but it's like sparring, you know, you can have your own plan, but you kind of have to react to what your opponent is doing, what they give you. And if the market isn't giving you the opportunity, well, patience pays, I guess, in the long run.
Yeah, exactly.
Absolutely.
All right, I got 5 minutes. Do you want to quickly go over like if anyone else is trading for the rest of the session, like how to manage their trade or how to?
Yeah, 100%. So what we're looking over here, obviously we got the hour about to close in 5 minutes. So we're going to take a look at the hourly right here. And it looks like the hourly is still rejecting 154.300, right? We're still holding that support, previous resistance of that that range that Sharma was just pointing out over here. So we also have a wick to possibly fill. Now, what we could get in an hour, or in an hour, in 4 minutes, we could get that bottom wick forming on this 1 hour candle, a flip bullish to fill that wick and continue right back up. So we got to see what's going to be happening, but you need to have a plan for every single trade. And I just realized we haven't really been breaking down gold today, besides, before. But that's what I'm looking at on GJ. No reason for you guys to be taking any kind of sells until possibly we break 154 flat, right? We start to break this level over here, maybe retest to continue right back down to 153 600. But again, technically there's no reason, and fundamentally there's really no reason to be selling GJ right now, right? So we get the clean move to the left that should give you more confidence. But just watch how this 1 hour candle closes. It's a good setup. It's a little choppy, right, on the lower time frames, but it's a solid setup right over here. So we'll see what we got going in. It looks like we have some calls for daily streams now.
Yep.
You see the YouTube chat?
Yeah.
Uh,
Pretty much exactly what you said, but also realize that the market is collecting orders as it is pushing up. So
Yep.
always pay attention to higher time frames, the 4 hour, the daily time frame, what's going on there. On the 1 hour, you are getting a break and retest and continuing up. Exactly what Stefano said. Wait for this candle to close, and the next one, if it makes a bottom wick rejection and then flips bullish, that's the momentum that you need in the market to break past this 154 500 level and then continue push up to 154 around 800 or so.
especially with the equity market opening up soon. So you're
Yep.
going to get that volume coming in, and that could push the pound right back up. Damn.
Absolutely.
Sounds like a lot of people want this. Should we give the people what they want?
It's a little tough right now.
Yeah, no, I know it's tough for everyone in California. But
It's
that's
okay.
that's one
waking
more.
up, it's okay waking up at like 3:30, but just heading off sometimes like meetings and stuff.
Maybe
gonna
you
say,
can pre-record.
Maybe
Wait,
New
that's
Year.
not really a podcast, huh? Is it?
No,
It's not
we're talking
live.
about live streams here.
Oh,
Yeah.
Um,
Yeah, so maybe around New Year's we will revisit
Okay.
and
Cool.
reconsider this request.
That could be one more reason for you to move out of California,
Absolutely.
along with 300 others.
I have a lot of reasons to move out of California.
I feel for you guys. That's come to Florida. Yeah, Andreas, I'll meet you down there. I would
after
love
the
to.
test.
What was that?
After the test.
Yes, after the test. How about you move your dojo out here?
Or we could set up another one. That would be sweet.
That'd be awesome.
Ooh, Ian's thinking big.
I like that.
Well, I don't want to do it. Someone else can do it.
Thinking like a business owner.
All right, you guys, I gotta head off, but if you guys have any questions, feel free to reach out to either of us on Instagram. So mine is just Sharmafx, same thing as the YouTube here. Stefano's, yours is Stefano's FX 28, right?
On Instagram, and then Stefano's FX on YouTube.
Perfect. So feel free to reach out with any questions. I will be watching this as I get time throughout the day. And if there's any updates, then we'll go ahead and do that too. But other than that, have a great day, everyone.
See you guys later.
Thank you.
Thank you very much.
Are we done with YouTube?
Yes, we are.
Awesome. How'd you guys do, guys? Everyone succeed with their trades? People still in GJ?
Yep,
Everybody
still in it.
balling out.
Okay, awesome. All right, awesome. We got Gio in here. We got Visitor in here. Stipe.
Oh, I forgot.
Carlos.
Do you remember Sahil from Paul's stream?
Who?
There's like this guy named Sahil from Paul's stream. So he asked me, he wants to come in and join in our Zoom calls on Wednesdays, and I told him I'd send it to him, but I forgot today. But I'll
Okay.
go do that next week.
Okay.
Yeah, he just wants to come on and just talk and kind of, get back into it like he used to with Paul.
Oh, got it. Yeah, he's missing out, huh?
Yeah.
Yeah,
It's
we'll
pretty
get him in
cool.
here. Sahil?
Yeah,
You can't say I remember him.
he's from Canada.
Okay. Of course.
Yeah.
They all are. All right, guys.
All right,
You guys have a great day. Sharma's got to bounce. So if you guys have any questions, like we said, reach out to us. Send your charts into either one of the groups, and we will see you all obviously tomorrow for individually, but next week all together.
Yes. All right.
Maybe we should do a
You guys-
back testing session or something.
Oh, I'm down. Friday?
Maybe Sunday.
Yeah, I'm down
Actually,
for Sunday.
hold on. One sec.
Because I do simulation sessions on Fridays anyways.
Okay. Friday's gonna be hard.
We could do
Wow.
Sunday, start off the week with a simulation.
Okay. All right, we'll keep you guys posted. We'll be talking back and forth, but
Awesome.
and then we're
See you
dropping
guys.
Chris's episode.
Well, yeah.
I'm sorry, I
Well,
keep
don't-
delaying you leaving.
No, it's all good. I'll go ahead and send you his episode today.
Awesome.
Won't
All right,
come
guys,
out.
have a great day. All right. Sharma,
All right.
good luck.
Thank you.
you.
Bye.
Everybody.
Thank you.